Hey, good evening. I'm Dan Fitzpatrick at StockMarketMentor.com, and it is Saturday, September 26th. Here, Nike, I'd mentioned in the chart of the day on Thursday that, look, if you were, I wouldn't be shorting this stock, but if you were long the stock, I mean, they had great earnings, I would want to be selling into strength. I wouldn't want to be buying the stock. Lo and behold, the stock gaps up, and then ultimately it trades up another 1.5%. I will stand by my suggestion, and that is sell into strength. Let's look at this on a chart with 3 standard deviations on the Bollinger Bands. Clear up here. This is a level at which the stock breaches like 1% of 1%. I mean, it's basically never supposed to go up above. Here's one on where it went below 3 standard deviations and immediately it snapped back. My point is, you want to be looking to sell into the strength. And hey, look, I'm a big fan of swoosh. I love it. I'm wearing Nikes right now. But you want to be selling this stock into strength. You can always buy it back. But Dan, should I short it? No, it's Nike. You don't want to do that. But look at Foot Locker. Okay, you get the same kind of thing. I would imagine, but I'm not sure, that Foot Locker gapped up. Hey, they sell a lot of Nikes. Gapped up on Friday, traded, and then ultimately closed a bit lower than the open. Okay, this was coming out. This wasn't a volatility squeeze, but at least it wasn't as extended. You want to be selling this too. Wait for more consolidation. Look at Skechers. Skechers, now be careful here because Nike's up. By the way, Skechers totally, they clothe the same part of your body. It's the stuff down there that it's really smelly, your feet. Other than that, they have nothing in common with Nike. Well, I shouldn't say that, athletic, but Nike's Nike. But look at Skechers. It gapped up on Friday. Hey, got to buy shoes, shoe stocks, and then traded down. Okay, it was down to more than 2.5% from the open. So Skechers did not act well on Friday. And here's the point. Just because a stock is in a volatility squeeze, just because it's resting on a key moving average, does not mean that this is a screaming buy and the next move on this stock is going to be higher. You want an example of how that's not the case? Look at Paycom. Drifted sideways along the 50-day moving average. Sure looked like it could be moving higher. No, it broke down to a low point. It broke down out of this squeeze. So my point is, I really think you need to be selling Nike into strength and then look to buy it back at a lower level. Ultimately, the stock likely to go higher. But doesn't this look like a little bit of a crescendo high? Doesn't this look like a little bit of a blow off top, or at least close to? So anyway, that's my suggestion on Nike. Members, over to the weekend update. I've got some shorting candidates for you, as well as some other comments that I think you're going to find useful and profitable.